Hello guys, welcome back again to my YouTube channel. Today I am back with another brand new strategy for the synthetic markets, to kill the synthetic markets like a pro. So for this strategy today, we're actually going to be talking about types of structures, that is types of market structures. Okay, we're going to be actually looking at the trending structures, the reversal structures, and the ranging structures. But before we get to begin, this strategy is actually wrapped up about one particular thing, which is the candlestick patterns. Okay, so before that, let me just go ahead and show you exactly what I am talking about. So if you can see my screen right now, this is the market structure is wrapped up about around about this what you can actually see on my screen right now. All right, the market structure is actually wrapped up about this whole thing, the candles. The market structure is wrapped up about the candles, because the market actually makes what the candles actually make the market. So if you can read the candles very well, therefore you can be able to interpret the structure of the market at any given moment. Okay, so the candlestick patterns that we are going to be focusing on today, please take note, and please, you have to bring out a sheet of paper, all right, so that you can be able to take notes, all right, because these things I'm going to be saying are very, very important, and they are going to be the key component for you to really understand this strategy that I'm giving to you guys. So right now, let's proceed. So when we talk about the bearish engulfing pattern, is where a bullish candle is being engulfed completely by a bearish candle. So when we have that scenario, we have a bearish engulfing candle. And when we have such patterns, we are looking for what? For selling opportunities, okay, to go bearish, to sell the market. So, and the other type of candlestick pattern that we're going to be looking at should be the bearish tweezers. Okay, these types of candlestick pattern look more like look the bearish tweezers. In this scenario, what happened? We have the market, we have the open and the close of the candlestick. The market went all the way up to this area, but before the market closed, sellers were able to come in from this area and push the market all the way down to here. So that's why you have this particular type of candles, and there are two of them. So what happens when you see this type of candles? You'll be looking for opportunities to sell. So just be patient till the end of this video, because this is actually going to lead is going to link up to the next thing I'm going to be talking about. Okay, guys, so just be patient, right? So we have our bearish tweezers. When you see this type of candlestick patterns, what happens? You should be looking for opportunities to sell the market. So, and now we have our bullish engulfing. For the bullish engulfing candle, you have the red candle being completely engulfed, the bearish candle being completely engulfed by what? The bullish candle. So in this particular situation, once you see this type of candlestick patterns, you should be looking for opportunities to buy. All right. So these candle patterns, you don't just trade them in isolation. We are going to be using them as confirmation to get our entries into the market. All right, guys. So you're going to be using them as confirmation to get our entries into the market. So, and now we have the bullish tweezers. Okay. So we can also call them tweezers top and tweezers bottoms. So now you have this the bullish tweezers. So in the downtrend, you should be looking for such candles, okay, where you have the market open. We have the open of the market, okay. The market went all the way. We have the open of the market here, and then the market went all the way down to this area. And what happens when the market goes to this area? We have buyers coming in, pushing the market all the way up to that area. So what happens? We have a wick being left, okay. So when the market opened in this area, the market went all the way down, okay. So what happens? Buyers came and pushed the market all the way up to this area, and then it came close halfway. So that's why we have this bullish tweezers, okay. When you see them, you should be looking for opportunities to buy the market. So the next thing we're going to be looking at, the Doji. These candlestick patterns indicate what? Indecision in the market. When you see this type of candlestick patterns, it means you should stay away, relax, don't do anything. Okay, don't do anything. So we also have the evening star, but I'm not really concerned about those ones because I don't use them. All right. So we have the hammers. The hammers are the hammer and the inverted hammer are the key component of this particular strategy, which we're going to be talking about, guys. So we have the hammer. Whenever you see the hammer, right, they are used for confirmation to get entries, guys. They are used for confirmation to get entries, either your buy entry or your sell entry. For your hammer, you're looking for them to get what? Rejections in areas where you are looking to go long for this particular strategy, which I'm going to be giving to you guys. So for the inverted hammer too, in a downtrend, you're looking for opportunities to go short. So right now, I'm just going to end here so we can continue, because I've touched the ones that are actually key component to this particular strategy. Okay, to this particular strategy. And these are just the ones we need, because my strategy is actually built around this. So right now, we're just going to go ahead and proceed to the other types of patterns. All right, let me just share my screen with you guys. Let me just share my screen. All right, so right now we are going back to the chart. Yeah. So if you can see very well, we have types of market structure. We have the trending structure, the reversal structure, and the ranging structure. So for the trending structure, guys, we are looking at a situation or a scenario where the market is moving we have a push phase, we have a corrective phase, and we have a push phase and a corrective phase and a push phase again. Okay, guys. So when you have a scenario like this, guys, we have a trendy market, guys, because one thing you have here, we have a higher low, we have a lower low, and now we have what? A higher low and a lower low. All right. So just be patient, because I've already illustrated examples of these on a live chat, whereby you're going to be getting such vivid examples that will enable you to understand. So I'm just going to go ahead and just clear this, guys. Let me just go ahead and clear this particular candles. So for the next one, we are looking at that's for a downtrend. And the next one we are going to be looking at, we're looking for trending structure. We are looking at where the market is pushing to the upside. We have a corrective phase, or the exhaustion phase, and we have a push to the upside. We have a retest of this area, which gives us our higher low, and then we have our higher high being formed. So these types of scenarios are what? The trending structure, where the market is actually trending to the upside or trending to the downside. But in this case, we have a trend to the upside, where we have our higher high, higher low, and a higher high, higher low. So when you want to participate in this kind of market, or in this kind of market, you don't want to be buying in this particular area. You don't want to be buying on the push phase. You want to buy on the exhaustion phase when the market comes to make a retest. Okay, guys. So you don't want to be buying on the push phase. You want to be buying on the exhaustion phase when the market comes to retest. So right now, let me just go ahead and show you some examples. Some examples on the live market, guys. So let's go ahead and show you. Let me just go ahead and show you some examples. All right. So we are just going to be looking at okay. All right, guys. So we're going to be looking at VIX 10 1 seconds, guys. So we're going to be looking at VIX 10 1 seconds. Everything has been done, guys. Everything has been done. So just wait. The chart is actually loading, guys. It's actually loading. Let me take it to 240 minutes. All right, 240 on the daily. Yeah. I don't know why it's taking too long. Okay, yeah. So right now we have our charts, daily chart being open. Guys, we have our daily charts being open, guys. So when talking of a trending market, okay, when talking about a trending market, guys, we're talking about a situation where the market have a series of highs and lows. So right now, before we started, like to be able to identify the structure of the market, right? So first and foremost, looking to the left, okay, guys, looking to the left. Wow, what's this? Right. Before you begin to identify the structure of the market, guys, looking to the left, what happens? We looking to the left now, we have what happens? We have this market closing, giving us a high, all right, giving us a high, and that high is higher than the high within this area, guys. So we have that high being higher than the high within this area. So that gives us a higher high. Okay, and we have a low here. You understand? And we have a low here and we have a low here, which gives us a double bottom because the market actually failed to create a lower low. So based on that scenario, this market pushed to the upside, giving us a higher high, okay, which is higher than this high, right? So, and now what happens? The market came here, giving us a higher low, which is actually higher than this previous low, okay? Therefore, we have a higher low. And then what happens? The market pushed to the upside. And then what happened? We have the push phase of the market, the push phase. This is the phase I was talking about, that you should not be looking to buy on this push phase, but rather you wait for exhaustion. So what happens? The market formed a higher high, came back to this zone, and give us a retest. Okay, here is where your master candlestick patterns that I talked about comes into play. All right, so you can see that master candlestick pattern there. All right, so what happened? You took a buy, your stop loss just a bit below. Don't mind, this is the daily chart. You can still trade it too, but I'm just using this daily chart because this is a perfect scenario that actually depicts what I'm actually talking about. So you see, this is the higher low. This is, at this point, is where you should be getting your entries in. Don't buy on the push phase, guys. Don't buy on the push phase. You should not be wanting to buy on this push phase because anything can happen, guys. Anything can happen. When you begin to apply the strategy and the rules which I'm giving to you, you will find out that your win rate to become high, guys. Your win rate to become high. So right now we have a retest of this area, giving us what, a higher low, and we have a push to the upside. This is the area where you should be wanting to buy. You should be wanting to buy in this area. Why? Because this area shows that the market has actually exhausted and is ready to push to the upside. So looking at this area, what do you see? You see an engulfing candle, right? You see an engulfing candle. After that engulfing candle, you buy, and your stop loss just a bit below it, and you take your profit, guys. So you see this market. You see. This strategy is actually dope. It's super cool, guys. So what happens? Right now, even if you take your trend line, you find out that you have a brick wall, guys. You have a brick wall. You have a brick wall, and the market is actually respecting this brick wall, which is the trend line. So we'll come to this. We'll come to this, guys. We'll come to this. We'll come to this. We'll come to this. So right now we have our higher high being formed and our higher low, guys. We have our higher high and our higher low. So in this case where the market is failing to form a higher high, what happens? We have a reversal structure, which is a double top, guys. We have a reversal structure, which is a double top. But right now we are still talking about trending structures. So we just finished with the uptrend structure. Now let's look at what downtrend structure. So now we have what our lower high, because this low is what this low is what lower than this previous high which we had in this particular area, and this low is lower than this previous higher low which we had. So therefore the market has actually changed its structure by we are not actually using the trend line to define the structure of the market. We are using trend line too, and also the structure of the market has changed because one, this was the previous higher low. What we're expecting should be a higher high. So the market actually breached that area. The market actually breached that area, and what happens? It gives us a lower low and then gives us a higher high. So from this higher high, you should be looking for opportunities to want to sell within that area, okay, within that area. And what happens now? The market came and sold from there, gave us a lower low, You understand? And then gave us a retest of this particular zone and giving us a double top within that area. A double top, this double top reversal patterns can actually be used as either reversal structure or continuation structure. All right, so see that structure, see the structure of the market. We have our lower high, our lower low, we have our lower high, our lower low. So right now, I'm just going to step down to the 4 hours time frame so that we can actually look at this particular session of the market, this other session of the market where everything is so tiny, so that we can actually look at them very well. So now, looking at this market, what happened, guys? So looking at this market, what happened? You can see now, if you take your trend line, you see that you have what? A brick wall. Okay, you have a brick wall, and this market has actually been respecting this brick wall for a prolonged period of what? Time. That's been actually been respecting this brick wall for a prolonged period of time. And then what happens? Let me just go ahead and delete this trend line, guys. Let me just go ahead and delete this trend line. So after the breach of this brick wall, we have a higher high. And after the breach of this brick wall, this is our higher low, guys. This is our higher low. And then now we have a higher high, guys, and what the higher low. So based on that, you should be anticipating to buy the market around this area on the retest, guys. So the market came back to this area to give us what? A higher low, okay, to give us a higher low. And we're expecting it to push to the upside. Okay, but yet there were no, it failed. And what happens? The market chose to respect this area. So within this area, you could have actually looked for buying opportunities within this area. You could have gotten it again, because this previous low refused to break, and it actually served as what? A support level, and it was able to catapult the market to the upside. So looking at this particular candles here, you have what? A higher high, a higher low, a higher high, a higher low. So right now, the higher high is formed, a higher low. That's the retest, guys. So what happens? You could have bought in this area and catapult the market. You have been able to profit from the market. So learning to understand the structure of the market is actually going to change your trading style, and it's actually going to change the way you see the market, guys. It's actually going to change the way you see the market. So it's actually going to change the way you see the market. So we have talked about the uptrend structure and the downtrend structure. So now still yet we are still looking at what? The uptrend structure. So here we have this push phase, right? Giving us a high high within this area, because this was supposed to continue to the downside and continue in that series, but it violated that series, giving us a high high, a higher low, and then now we have a higher high. What happened? The market created a higher low. So you should be looking for opportunities to buy within this area. So you should be looking for opportunities to buy within this area. This area is called the exhaustion phase, the retest phase, or the exhaustion phase. So within that area, if you go to the smaller time frame, you'll be able to see reversal candlestick patterns, guys. So right now, we have a higher high. You understand? So we are anticipating what? A higher low, okay, for the market to continue pushing to the upside, but it actually failed. Why did it fail? If we go now to the daily, I'll be able to show you and give you reasons why that failed. Let's go to the daily. 1440, 1440. On the daily now, what happens? Look at this. Look at this, guys. Look at this. So it's beautiful, guys. It's beautiful. On the daily now, look at that area which I'm talking about. Let me just zoom in a bit. Let me just zoom in a bit, guys. Let me zoom in a bit. So on the daily now, you can see this area. You can see this area. What happens? You see a big rejection of that area. You are seeing a big rejection of this resistance area. So the market was not able to close above. So because of that rejection, you have the market fell all the way down. Okay. So now let's go back to our 4 hours time frame. 4 hours time frame. So now we are looking at this now. So guys, I'm not providing every information for this particular strategy here. There's still more to this. There are still more things to this. But I know some of you are actually going to benefit from this, and some of you might actually want mentorship or join our free signal group. So we're actually open for all of that. So what happens? We have that daily candle being closed, and because of that, this structure is being violated, and the market gives us what a lower low. And now looking at this box, there are so many things I teach, guys. So I can actually teach you the box strategy, and still yet you'll be able to trade successfully well. Still be able to trade like a professional trader. Come in. Let me just go ahead and delete these things. All right. Let me just delete this stuff, and I actually want this one gone too. Okay. All right. So right now we have the box strategy. We have the breakout, the lower low being formed, and the market came back. The moment it kissed that area, what happens? It continues falling to the downside. So right now we're just going to go ahead to the 60-minute or the 30 minutes. Let's see how powerful the candlestick pattern, which I shared with you guys at the beginning of the video, actually played out. So right now it's just going to zoom in a little bit, and we're just going to screw to that area. We're just going to screw to that area. So you see within that area, we have some rejection candles. And then if you go down to the 30 minutes, guys, if you go down to the 30 minutes, you'll be able to see some engulfing candle within that area. The reason why I'm saying this, and I'm so certain, the 30 minutes, yeah, what we are looking at should be that area though. So it should be this area. What we are looking at should be this area. Sorry, my network is pretty bad. It's actually bad, yeah. So it's not loading. I don't know why. It's not loading. I think I just have to go back to this 60 to 40, yeah. All right, so right now we are back to the 4 hours, yeah. So let me go back to the 60. So within that area, yeah, you can see this within this area here. Within this area here, you can see this engulfing candle pattern, okay, where we have the blue candle being completely engulfed by the red candle. Okay, so what happens? The market pushed to the downside. I could remember giving this signal, guys, and this signal made me so much money. It made me over $1,800, guys. So what happens? We have a push to the downside, and then now what happens? We have a breach of this a lower low, and what happens? The market came back to it, and then retested, guys, retested. And if you take your trend line, most often than not, so you see, is that it actually came to this zone, this particular zone of the trend line. So what happens? The market kept pushing to the downside. So right now, you're just going to go back to the 4 hours, so that you actually see the way that area played out. 4 hours. So you see, I'm not going to waste much time to this because there are so many things we have to touch, and I don't want this video to be too long, guys. So I don't want this video to be too long. So, okay, so you have this lower low being breached, as you can see, guys. You have this lower low being breached, guys. So as you can see, that area got breached, okay? And what happened? We have another lower low being formed, and a retest giving us a lower high. So we have that candlestick rejection pattern, and what happens? The market kept pushing to the downside, just on and on and on and on in that same structural pattern. So another scenario which we are going to be looking at should be this particular phase here, here. So I just want to be able to analyze this stuff, explain the video for you guys to understand. Then we'll move to another thing too. Right, so I want us to look at the daily first. Yeah, the daily. Let's look at the daily time frame. Let's look at the daily. Yeah. So on the daily time frame, as you can see, guys, looking at, sorry, with all these stuffs on my chart, which I can't take them off for now until we are done. So with all the stuff on my chart, on the daily time frame, if you can't see within this area, you can see this powerful candlestick pattern. You can see this powerful candlestick pattern that we talked about, the master candlestick pattern, which I also be teaching. There's similar to this candlestick pattern because they actually form they actually determine the structure of the market. Yes. So you see this master candlestick pattern, right? When you see it, what happens? That means the market failed to close below, you understand, and the trend failed to continue to the downside. So what happened? You should be looking for what buying opportunity. So based on that, I can remember giving is a buy trade. Okay, I can remember giving a buy trade on my group, on my VIP group, when I saw when I saw this market coming back to this particular level, and I gave this signal. I gave it from here, and the market pushed to the upside. I can actually take time to show you that, but if you are interested in seeing it, you can actually go to my Telegram group. Okay, you go to my Telegram group, you see it there. So what happens? The market gave us a higher high. We are anticipating a higher low. What happened? The market came to this area, retested, guys, to tell you that these principles which I am teaching actually works, guys. This principle which I'm teaching actually works. So we have a higher low which I anticipated even before I started recording this video, guys. So what happens? The market kept pushing to the upside. We are expecting another high, guys. So it will come. We just have to be patient, guys. We just have to be patient. So right now we're going to go to other things, guys. Let's just go to other things. So right now we're going to be looking at the reversal structures, guys. So when we talk about reversal structures, we are talking about structures such as the double top and the double bottom. So right now, I know you'll be kind of like asking, what does that even mean? So for the double bottom, we have something of this nature. Yeah, the market is trending to the downside and is failing to close below. All right. Let me just explain. Let me just take a brief moment and actually explain that. We have a lower low being formed. Okay, this is our lower low. Okay, this is our lower high. Okay, so right now the market came from that area expecting it to form what, to give us a double bottom, though to give us a lower low. So, but rather the market failed to give us a lower low. It tend to respect this area and it pushed to the upside. So in that case, since it chooses to respect this area and push to the upside, we have what, our double bottom. So what you should be looking for, you should be looking for a retest of the double bottom and then a continuation to the upside, guys, buying the market to the upside. There are some examples which I picked to actually illustrate this. They're on the main chart, like the Deriv chart. And also we have a double top where we have a scenario where the market is pushing to the upside, and then we're expecting a higher high, and then we are expecting a higher low, and then we are expecting another higher high to be formed. But rather the market failed to give us another higher high, but rather came back giving us a double top, guys, and then gave us a retest. We should be looking for a retest and a continuation. Okay, guys. So that's how this chart market structural patterns play out. Okay, but for the sake of this video, I'm only going to be covering just two, and if you want to actually master the remaining one, you can actually contact me and we will get to organize that, guys. So right now, let's go straight up to, let's just go straight up to it, guys. Let's go straight up to it, guys. We're just going to be looking at few ones. They were actually the ones which I traded. We're just going to be looking at the ones which I traded. So the ones which I traded, but there's one significant one here which I did not trade, which is on the daily time frame, which I did not trade. I did not trade that one, but it's actually obvious. But this one will help you to really understand what I am actually talking about, guys. So let me check it to 1440, which is the daily time frame. Okay, let me just go ahead and, all right. I'm just going to go ahead. I'm zooming in a little bit. So, okay, this market was trending to what, the downside, guys. This market was trending to the downside, and what happens? We have our what, higher low, okay, and then lower low. So what happens in this particular case? We're expecting the market to push to the downside and give us what, lower low, but rather it failed and it pushed back to the upside, giving us a double bottom. You can actually see now that this is actually the double bottom. We have the retest of this double bottom. You should be looking to buy in this particular area, guys. We're looking to buy in this particular area, and we have that push to the upside. Okay, for the double top, for the double top, you have a scenario like this perfect scenario, which I actually explain, guys. This perfect scenario I actually explain. Well, we have the market. You have a situation where you are expecting the market to keep pushing to the upside, guys, but it failed to give us a higher high, but rather it broke this low, giving us a lower low, and then we have a retest, guys. You can just sell it from there. Your stop loss just pretty above it, and then a continuation to the downside. The double top or the double bottom can actually serve as a continuation pattern or a reversal pattern. So in this particular case, we have a double top still, but in this particular case, you can actually see it, guys. You can see it. You can see it, guys. It actually serves as what? A continuation pattern. Okay. So there's still more, guys. So if you want to learn more, guys, and nothing should stop you from hitting that like button and subscribing to this channel, guys, because we are going to be providing you with free content that are actually going to change your trading career. So right now, let's look at some trades which I took some weeks ago. Okay, some double top trade patterns which I took some weeks ago, and based on that double top trade pattern, this market is still actually selling. So let's look at this. Let's just give the market a few moments for it to load, guys, so we can continue. Okay, all right, this is actually perfect, guys. This is perfect. So you can actually see that this area, we have what? We have our higher high, we have our higher low, and then we have our higher high, higher low, and then we're expecting, we have our higher high, higher low. From here, we're expecting the market to keep pushing to the upside, but rather it failed to close above. We have a break, we have a retest, and then we had a continuation to the downside. Based on that information, the market kept selling. It kept selling on and on and on, and it's still selling up to now. And here is a continuation pattern, which is a flag pattern, guys. So if you're interested in mentorship, you can just contact me, and we'll get to arrange that out, guys. Get to arrange that, guys. So right now, let's look at some few other things, guys. Let's look at some few other things. So let's look at VIX 100. Yeah, let's look at VIX 100, guys. Let's look at VIX 100. Let's look at VIX 100. Okay. For VIX 100, we have what you can see here. We have a trendy market, guys. We have our higher high, we have our higher low. Okay, guys, we have, what is this? We have yeah, higher high, higher low. Okay, yeah, let me just bring that here. Okay, right, higher low, higher low. All right. We have what? We have our higher low, guys. So what happens now here? This particular area, this will actually be taking a lot of time. We have our high high, we have our high high, we have our higher high. So that's the series of the market. And now we have a double top, guys. We have a breach of this brick wall, which is the trend line. And what I'm actually waiting for, it should be a retest of this area, guys, because this signal, this setup, I've actually sent it to my free group. Okay, I've sent it to my free group, guys. I've sent it to my free group. So the setup is actually there. We are just waiting for the plan to play out, and then we can actually look for opportunities to capitalize on this market. We're looking for opportunities to sell the market from up there. Okay, looking for opportunities to sell the market from up there, guys. Looking for opportunities to sell the market from that area at the retest. We'll be looking for the master candlestick pattern within that area to go short on this market, because actually the brick wall has been broken, guys. So we have this is a double top, this is double top, guys. So we have our higher high, higher high, higher high, guys. So in that series, guys. So now let's look at other things. What other things should we be looking at? So now with the last types of market structure we're going to be looking at is the ranging structure. So what the range structure should be something you should want to avoid, guys. So it should be something you should want to avoid. Don't try to treat the range. Okay, so now I'm just gonna go ahead and show you some pretty good examples of ranges you should avoid, guys. So these are some pretty good examples of ranges you should avoid, guys. Don't try to trade the range. Just stay away. Just stay away, guys. Just stay away. You have a ranging market, guys. So this is a very choppy range. There's no way you can actually treat this range successfully. Okay, the actual definition of the market is you have 10% buying and selling. We have 10% buying, 10% selling, and then 80% waiting. Okay, 80% waiting. So if you cannot wait, what happens? You're going to donate money to the market. You're going to keep blowing your account, funding your account, and coming back again to the market. And you're going to actually keep telling yourself, trading is not for me, this and that, blaming the broker here and there. So why not you just follow some simple rules like the ones I've actually given to you guys? So right now, let's look at the last few things so that we can actually just end this video, because it's actually taking too long, and I don't know, most of you might have lost interest. Okay, so for downtrend structure, we are looking at one. This is not looking too good. I don't know why. Okay, yeah, let me just expand it like that. For downtrend structure, where you have the market pushing to the downside, just like we have it now, we have the retest level. The retest level should be the previous lower low, just this area, the previous lower low, this area. And I assume as you have been watching the video, you already understand what that is. We have the previous lower low and the previous higher low, yeah. So the retest level is the previous lower low. Okay, so most times the market will respect this area. Okay, but you should not just be looking at selling the market within this area. You should be looking for the master candlestick patterns, which I talked about, guys. So you should be looking for the master candlestick patterns to give you your confirmation. If it doesn't give you that confirmation, which you're actually looking for, yeah, so you should be waiting for this area. That means the brick wall is going to be broken, and you should be waiting for to sell the market within this area. And within this area, you should be looking for reversal structures such as this double top. Okay, guys, so you should be looking out for head and shoulder pattern and so on and so forth. So if you fail, if you prepare to sell the market within this area and you miss the setup, so you should not be wanting to sell the market at this area, because at this point anything can happen. The market can decide to go back to this area and form a double top. So the best thing you should have to do is wait for the market to breach this low and give you what, a lower low, and then come back to this area, to the brick wall, the downtrend brick wall, and then give you a retest and a retest of that brick wall. And then you should look for the master candlestick pattern, which we talked at the beginning of the video, to shoot this market. So right now, let's, for the uptrend, like we had it on the VIX 100 chart, for the uptrending market, like we had it on the VIX 100 chart, you should not be looking to buy the market at the impulsive phase. You should be looking to buy the market at the exhaustion phase, because most often than not, you buy the market at the push phase, you're going to get stopped out. Okay, and your stop loss is going to be too big, guys. So why not you just wait patiently for the market to exhaust, come back to the key level, okay, hits the brick wall, and you look for the reversal master candlestick pattern, or you wait for the market to actually come back to a key level where you can actually capitalize on the market with a good risk to reward. Okay, so most often than not, the market might not choose to respect this area, but based on the information which I've shared with you today, the master candlestick pattern, you'll be able to look for confirmation, confluence, to actually gather to be able to buy this market. So that's that. And now let's just go back to the chart and look at a few things that pertain to just what I've actually explained now. So right now you have a market which is actually trending, guys. So you have a trending market which is actually pushing to the upside, like the VIX 100 chart. Okay, you have a market which is pushing to the upside, like the VIX 100 chart, guys. So right now, what happens? I told you guys, don't try to buy the market on the push phase, because most often than not, you get stopped out. So if you are trying to buy this market and on this area, what happens? You're going to get stopped out, guys. You're going to get stopped out. So what happened? You wait for the exhaustion, the exhaustion phase, the market to come back to a key level. We test that level, and you can see that you have an engulfing candle on the 1 hour time frame. And let's go to the 4 hours time frame. Let's see what we have there. So you have to learn. I also be doing videos on the multiple time frame analysis, guys. So I'll do videos on that to be so right now, what happened on the 4 hours now, you can actually see a clearer structure, guys. You see an engulfing pattern, but this engulfing pattern, your stop loss is actually still very big, guys, because this guy is actually very volatile. But you have gotten your entry on the 1 hour time frame. So if you miss this particular impulsive move, guys, you wait for the retest, guys. So the retest of this lower higher low, so you wait for the retest. So that if you miss this area, you should not be trying to buy. You should wait for the exhaustion, guys. So right now, what you can see there, let me just zoom in a bit, guys. So you can see the master candlestick pattern, which I talked about at the beginning of the video. You don't have to just cram them. You have to really try to understand them. So you see that candle, what happened? The market kept pushing to the upside. So that's we have our brick wall, which is the trend line, which is a trend line. So the market came, retested that area in line. There are about 3 or 4 conferences to this trade. The market is trending to the upside. That's one. The structure is to the upside. And second, we have a retest of this trend line. And then the third, we have the master candlestick pattern. The fourth, we have the trend line. Okay, so what happens? You buy the market, and what happens? You profit. So right now, looking at this other particular candles, like the double top pattern, which I talked about previously, guys. So looking at the double top pattern, what happened? What happened? So you see this double top, and secondly, you have the breach of that brick wall, guys. So what happened? You're waiting for a retest of this area of the brick wall. You are waiting for the retest of the key level in the market. So from that retest, you should be looking for your master candles pattern. When you get that information, nothing should stop you from taking the trade, guys. Nothing should stop you. Nothing should stop you. Let's look at another example again. That example should be VIX 75, guys. And actually, there was a trade I actually gave those in my VIP. Guys. There's a trade I actually gave those in my VIP, and those guys took the trade, guys. So right now, we are still on the trade again. That's VIX 75. We are on a sell trade. We have the rejection within that area. So if I scale down to the 30-minute time frame, let me just give you reasons to why we took this trade. We're almost taken out, guys. We're almost taken out, but we're still on it. We're still on it. So the reason to why I took this trade is let me just remove this. We have this we have the break of this brick wall, and we have this zone being created. Okay, but in this case, there's no chart pattern. So what happens? I have that retest, the master candlestick pattern. I just took my sell. That's when I give them the sell, guys. So based on that, we're just still holding to find out what actually happened. We never lose, we learn, guys. We never lose, we learn. We never lose, we learn. So now, right now, let me go ahead to the daily time frame, give you an example, and then we'll proceed from there with other things, guys. We'll proceed from there with other things. So, okay, there was a trade I gave those in my VIP group. Okay, you know that VIX 100 has actually been trending to the upside. We have a series, okay, we have a series of highs and lows. This is actually a trending market, guys. So we have our low, we have our higher high, we have our higher low, guys. So we have another higher high, we have a higher low. So based on that structure of the market, definition of the structure of the market. So, and for the past months, many months, let's say since when? Let's just see this. Since September, yeah, the market has not actually traded above that area. So for the first time in these few weeks, the market actually broke that area, and we have a retest, guys. So we have a retest on that zone. Yeah, so based on that, anticipated a continuation to the upside. So we are looking at 10,000, 180,000, 1 million. Is that? I just don't know. Okay, 1,080,000. Yeah, we're looking at 1,080,000 for the target. I don't know why it's actually taking time to look, guys. I don't know. Let me try the 1 hour time frame. Okay. So based on that area, we have our double bottom here. We have our double bottom. We have our double bottom. So we're able to capitalize on this trade. Able to capitalize on this trade, and we took this trade all the way up to this area. And what happened? We had our double top. We have our double top, as you can see, but I was not able to capitalize on this particular market structure. Why? Because it happened late at night. It happened late at night. Yeah, although I saw it, but I could not identify because I was still enjoying my sleep. That was around 12 a.m. 12 a.m. Nigerian time. So you can actually see that I was deeply asleep. So you see now we are coming back to profit after the market tried to take us out. So we are coming back to it and we are still holding that shit. We're still gonna hold it. So right now, let me show you some examples on the 30 minutes here. Let me just show you some examples, but I'm still going to show you this trade, the buy trade we took on, and some other trades we took too on the VIP group. So okay, right now what happens? We have the double top pattern on the 1 hour. We had a breakout, we had a retest. Okay, that we're actually taking your trade there. And if you missed, you still have to wait for the structure, guys. You still have to wait for the structure of the market, guys. So what happened? You had a retest of this zone, okay, this zone, and you have this master candlestick pattern which we saw here, guys. And what happened? You have your brick wall, and you could have just sold there and you still maybe you'd have gone for a 1:2. You're like risking maybe $2 or $6 to get the $12 or so. Yeah, you can just go for your 1:2. Let's see what if we get a 1:2. Okay, you're risking $8 to get $18. Yeah. So that's a great risk to reward, guys. It's a very great risk to reward. Let me see this one. Okay, this one has a very good risk to reward. 1:3.62. So which is actually good, guys. We're still holding this. We're still holding this. So right now, let me just go ahead and share the Telegram group with you guys. So you'll see, guys. So you see, guys. Okay. So you can actually see this now, guys. So you can see this. So this is the VIX 100 trade which I shared, guys. So it's actually playing out right now. It's playing, guys. It's playing out. It's playing out, right, guys. So you can see this. You can see this. So please endeavor to follow us on the Telegram group, guys. Okay. See, this is the VIX 100 VIX 10 1 second trade. I told you guys we took that sniper buy entry from here. Okay, and I explained that to you guys. We took it on the VIP group and I was able to send the results down here. Okay, and now let me show you that VIX 75 trade. These were the results of it. So you can actually see that we made money from that trade, guys. We made money from that trade. So many trades we have been taking, guys. You can actually join us. Okay, so we were in a bit of drawdown for that day, as you can see. Okay, as you can see, guys. So coming. All right, so this was the setup. This was the VIX 100, VIX 75 setup, guys. So let's see. Yeah, this was the setup, guys. So this was it. That for that day, we're just there. We were waiting for a while. We waited and waited, and finally it paid off. So we also had a flat pattern on the VIX 75, and then we had a breakout. We had a retest, and we got our confirmation, and then we were able to push to the upside. So that's that, guys. So now let me share my screen with you guys. Let's go back to the chart again. Let's go back to this chart again. So yeah, so you can see the breakout. You can actually see the retest. We had that breakout. We had the retest, guys. We had our master candlestick pattern within that area. And what happened? We were able to capitalize on that move. So right now, let's finalize the whole thing and end the session. Okay. Okay. All right. So reversal market uptrend. So we have been able to talk about this, guys. We have been able to talk about this. So there's no point to talk about it again, which I made an analogy of this particular shandies on the VIX 100, okay? And also make an analogy of this on the VIX 75, where you have your brick wall and then the market failed to give you a double top and it failed, and then you have a breakout, the retest of that zone and a continuation to the downside. I gave you an example of that. Okay, so also you have a market in a downtrend failing to give you a lower low, give you a double bottom, and then breakout retest of that break wall, a continuation to the upside, look for buying opportunities. So rules of trading, guys, just take note of this one. So never risk more than 3% of your capital. This is actually going to help you on the long run, because most often than not, there are going to be bad moments where no matter what you try, okay, things are just not going to work the way you actually plan them to. So what is going to keep you is the risk management. So never buy in the push phase, which are actually illustrated by telling you that, okay, when the market is actually in a push phase, you don't buy, you wait for an exhaustion, and never sell in a push phase. When the market is in downtrend like this, don't try to sell within this area. Just wait for a clear market structural shift, and then you get your sales in. And avoid trading range. Avoid trading the range market or the choppy market. Such an example is this particular scenario where you have the market being in the range. Okay, and what happened? Just try. Don't always stay away from ranges. The sooner or later you start doing this, the more better your trading results are going to be, guys. So just avoid this kind of market scenario, because most often than not, you're going to end up losing money, and wait for clear patterns and clear market structure. So with this, guys, you'll be able to profit from the market. So please, 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 if you're able to watch this video to the end, please endeavor to give us a like, and please endeavor to hit that like button and subscribe to this channel, guys. So thank you once again. See you in the next video, guys.